Hello friends, welcome back to my YouTube channel. Myself Neha and name of my YouTube channel is Let's Talk About Accounting. Okay friends, so in my channel, I usually tell all of you up regarding accounting concept. Okay, so today we will be learning again a very important concept, and that is the meaning of drawing account. Okay friends, you all must be confused while making the entry that how you have to make the drawing account entry. Okay, by the means of the transaction or the type of the transaction, you must be knowing that what exactly is drawings. Okay, you must be able to bifurcate between the expenses which are for office use and which is for drawings. But you would be facing some difficulty that how you have to pass the drawing account entry. Okay, so in today's video we will be learning that how you have to make the drawing account entry and exactly what is the meaning of drawing account. Okay, so let's start. Okay, friends. So first of all, let me tell you that my name is Neha Khapre. I'm an accounting trainer, blogger, and vlogger. Okay, so I'm having my own institute named as IACE, in which I teach Tally ERP9, Tally Prime, GST e-filing, income tax e-filing, as well as MS Office, and that too practically with live demos. So if you're having any queries, do contact me on my number provided on my channel page. Okay, friends. So let's start. So what is a drawing account? A drawing account is an accounting record maintained to track money withdrawn from a business by its owners. A drawing account is used primarily for businesses that are taxed as sole proprietorship or partnership. Okay, in company form, there is no such transaction which we can say it as drawing account. But in case of sole proprietorship as well as for partnership, there is a drawing account. Okay, the partner or the sole proprietor can withdraw the amount for himself for his personal use from company's funds. Okay. Yes, and that is known as drawing account. Owner withdrawals from businesses that are taxed as separate entities must generally be accounted for as either compensation or dividends. A drawing account is a contra account to the owner's equity. The drawing account's debit balance is contrary to the expected credit balance of an owner's equity account because owner withdrawals represent a reduction of owner's equity in a business. Okay, now let me tell you that whatever capital contribution, okay, is being made by the partner, okay, or whatever capital has been brought by the proprietor into the business, okay, whatever whenever he withdraws some amount which we call it as drawings, then ultimately his capital contribution is getting reduced. Okay, so basically the capital contribution is a credit balance, and the drawings which he is making or he is withdrawing some money for personal use, that is debit balance. So ultimately his capital contribution is getting reduced. As such, he is making any drawings from firm's account. Okay. In keeping with double entry bookkeeping, every journal entry requires both a debit and a credit. Because a cash withdrawal requires a credit to the cash account, an entry that debits the drawing account will have an offsetting credit to the cash account for the same amount. Okay. So, since the drawing account tracks distributions to owners in a given year, it must be closed out at the end of the year with a credit, representing the total withdrawn, and the balance is transferred to the main owner's equity account with a debit. The drawing account is then reopened and used again the following year for tracking distributions. Because taxes on withdrawals are paid by the individual partners, there is no tax impact to the business associated with the withdrawn funds. Creating a schedule from the drawing account shows the details for and a summary of distributions made to each business partner. The appropriate final distribution may be made at year end, ensuring each partner receives the correct share of the company's earnings according to the partnership agreement. A journal entry to the drawing account consists of a debit to the drawing account and a credit to the cash account. The journal entry closing the drawing account of a sole proprietorship includes a debit to the owner's capital account and a credit to the drawing account. For example, at the end of an accounting year, Mr. Ramesh drawing account has accumulated a debit balance of rupees 24,000. Okay, it means that he withdrew rupees 2,000 per month for personal use, recording each transaction as a debit to his drawing account and a credit to his cash account. Okay, the journal entry closing the drawing account requires a credit to Ramesh drawing account for rupees 24,000 and the debit of rupees 24,000 to his capital account. Okay, you have to debit the capital account. It means you have to make an entry as drawing account. Okay, so in this way, the capital account Okay, in this way, the capital account balance will get reduced, or the capital contribution balance will get reduced, and drawing account will be debited. Okay, so whatever funds is being withdrawn by owner or by the partner from business, then it is known as drawing account, and the entry will be drawing account debit to cash account. Okay, so in this way, we have completed with the concept of drawing account. I hope you must be clear with the concept of drawing account. So if you have liked my video, do subscribe my channel and keep supporting. Thank you so much.